Good morning and welcome to the World First Weekly Report for today, Thursday the 28th of July. Well, over the last week we've seen a lot of risk come out of the markets. This is really off the back of the US government debt concerns. We've had the House Speaker, John Boehner in the States, talking about new legislation overnight, which is really bringing to a front the potential risk of the US government defaulting on its debt on August the 2nd. John Boehner has gone ahead and discussed his plans to indeed cut welfare and keep tax cuts in place, and this is obviously having an impact on whether the two parties will be able to come to an agreement before August the 2nd. The long-term effects on the global economy would be significant should they default. Obviously we'll see yields increase, and this pretty much takes out the Federal Reserve from being able to have an impact on the monetary policy side of things. Going forward, we'll be looking for further discussion on the debate, and if we don't see an agreement before August the 2nd, there will indeed be an economic backlash globally, or economic contagion globally, off the back of the amount of or the lack of confidence for the US Treasuries, which, as we know, have always been regarded as the risk-free asset, and the US Treasuries have always been regarded as the debt that would never be defaulted on. Locally, we've had our own data out this week. We've had the inflation figures. The inflation figures have been higher than what we expected. The CPI figure came out at 3.6% and the PPI figure came out at 3.4%. The CPI figure is obviously outside the RBA's target band of about 2 to 3%, and therefore we are likely to see the Governor Stevens and the RBA generally raise interest rates sometime in the next 4 months. This is obviously putting further weight behind the Aussie, not to mention the US debt crisis continuing, and as a result we're seeing the disconnect between the growth in the mining sector and the rest of corporate Australia really starting to become more and more acute. Governor Stevens had a speech this week. He noted his own plan to get the country's fiscal policy back on track. He indeed sees a disconnect between the mining sector and the rest of the economy to having an adverse effect on the medium-term growth of the economy. He noted in his speech that we should be capitalising on our recent good times to lift productivity performances while the terms of trade are still high, providing the most secure base for strong increases in living standards. However, with our own federal government talking about restoring the budget to surplus by 2012-2013, it's highly unlikely that we're going to see this fiscal pulse be brought to the, be put in place really with our own ambitions to get the budget back in shape and back to surplus. Obviously, this contrasts heavily with what's going in America. In the States, they're obviously the Republicans are looking for more and more cuts, and this, should they pass, would obviously have a long-term effect on just how much growth we'll see out of the States in the next 3 to 5 years. Look out for an agreement coming up before August the 2nd. Like I said, a lot of risk is coming out of the market at the moment. The S&P 500 was down more than 2% overnight. However, the Aussie US dollar is remaining resilient above the $1.10 level, really off the back of the concerns of the default. Should that agreement come into place, however, we will see the Aussie come off, and however, generally speaking, we're seeing some strong levels supported for the Aussie, and it should maintain these levels for the medium term. If you'd like an update on the market, or if you would like to book a trade, don't hesitate to get in touch. Enjoy your day.